Hey there, Tamir from Fibonaccis-Traders.com here with the daily market recap. Let's see what the SPY and friends brought us today. SPY inside a doji, hovering above the 392, 393 level. This level is an important level of support because it was an important level of resistance and support throughout 2022. So now let's see what this short wick will bring ahead to the SPY. Breaking below the 393, in my opinion, this gap to the downside will get filled, and the sooner the better, because we know more than 80% of all gaps will get filled throughout time. So now that we are in a short-term uptrend and the bulls are trying to take control back, so this gap needs to get filled, making a higher low, and before going to retest this trend line once again. This trend line is the major resistance for bulls because it was from January 22 all the way till today. We have lower highs. So let's see. Short week, Thanksgiving, half day Friday. Let's see QQQ. Continuation of weakness under QQQ, relative weakness to the other indices. QQQ 280 needs to hold, otherwise this gap to the downside will get filled. To the upside, 293 is a major resistance for bulls because if we look left, from support to resistance throughout 2022. IWM still in the same range between the 181 to 188. Since it got rejected from this trend line goes all the way to November 21, to the penny of August 22, to the penny throughout November. And now let's see if this trend line, this green trend line, will hold the short-term higher lows. And if you want to learn more about trend lines, check the link that will pop just about now on the right corner. Short video that I made on why trend lines are the true support and resistance for price action, because we know price action does not go straight up, straight down, or straight to the right. It makes a zigzag movement. So trend lines are the true support and resistance areas for price action, and they are the true support and resistance to the future. So check this link, see the video, let me know what you think. Dow Jones also basically moving sideways 2 weeks now. If we take Fibonacci and we want to see the next support and resistance for price action, so clearly we see 340 to the upside, 330 to the downside. This level 330, if we look left, always look left to find support and resistance for price action. The 340 is a resistance because it was support and resistance throughout 2022. Now it's a resistance to the downside, 330, and below it we will go back down using these levels to the downside to manage our risk. VIX breaking down inside this support area, this uptrend support area. This area helps us to identify the higher lows on the VIX since July of 2021 throughout 2022. Now VIX again inside this area, going to fill this gap here. And as we know, VIX does not have any gaps at all. So this gap at the 21.22 area, 21.25 area will get filled, and we want this low to break below, and we want VIX to make a lower low below 1950. XLE on our radar at Fibonaccis-Traders.com. You can join our Discord and trade with professional, get ideas, share ideas, learn to become your own indicator. Check the links in the description below. XLE above the 68 area, closing above it. This 68 area is an important area of support and resistance. Let's see continuation to the upside towards 70 and maybe all the way to close this gap here and towards the 74 area. Natural gas with a nice bounce over the 675. This level was on our radar to take boil. Once price action broke up and above, we took boil long, as we talked about in previous videos. Now let's see if the 675 can hold as a support and if price action can break up and above the 730 area. 730 area, again looking left, and we see it's an important level of support and resistance. US 10-year yield still hovering above the 380 area. We want this price go retest and break even this trend line to the downside. Until it does not make this breakdown, the indices will not get a real bull run. So pay attention to the US 10-year yield. Crude oil went all the way to the 76 area, making a perfect double top from the 93, as we talked about since previous videos, since the last weeks or so, 2 weeks or so. We said that there is a potential of a double top from the 93 towards the 76 area. Perfect bounce. Now let's see if price action can continue to the upside. So these are the levels to watch to the upside as potential resistance, and if crude oil will go back down, we have the levels of potential support to the downside. XLE, because of the jump in gas and oil, XLE opened the day with a gap to the downside, went below the 88 area, which if we see left, it's an important support level, bounced off and closed the morning opening gap all the way to the 90.5. So pay attention also to XLE, the strongest sector throughout 2022. NVIDIA, since this doji of this trend line here, downside, now we have to see if 145 can hold as support. Failing to hold, this gap here will get filled. So pay attention, follow price, use levels and trend lines to manage your risk. And if you want to see, have a short video I made about Fibonacci retracements and how I use it, check the link that will pop just about now. Apple is next. We have this downtrend line which acts as a strong resistance. We can see bulls trying one time after another, breaking up and above, failing to do so. Now going to the downside, 146 needs to hold, otherwise 141 and maybe even this small gap here will get filled, and we do have some kind of a double top of the 153 area, and we know that price usually goes back to where it was in the past. So double top potential, failing to hold the 146, we will see 141 and maybe even 139. Tesla this pattern, head and shoulders look alike, coming into validation. But as you know, Fibonacci traders we don't follow patterns, we only follow price. And as we said before, 180 needs to hold, otherwise 170 will be next. And if 170 will not hold, 154 and maybe even lower towards this orange trend line. So Tesla is a short position. In my opinion, this is not an advice to take any trade or investment. This is only for educational purposes only. XLV have this area here, the 135 area is a very important area. XLV is trying one time after another and failing to break and close above this one. Few more times of a failure, we can expect bulls to give up and go to the downside towards the 131 area, and all the way towards this gap here, following price, using levels to the downside to manage the risk. If bulls really can break up and above, at least 2-3 days above this area here, we can take the Fibonacci and it will give us support and resistance to the future for price action. And we have this gap here at the 139, 138 area that also needs to get filled, but only if bulls will have enough power in their hands to break up and above the 135. XLF, broadening formation, we can see higher highs, lower lows. Now let's see if price action on XLF can go up towards this yellow trend line and break above it. Failing to do so, as we saw in previous attempts, several failure attempts, and XLF will go to the downside, closing this gap here. So always look left to try and identify support and resistance area for price action. Use the trend lines, follow price, and see gaps to the upside or to the downside, because gaps will get filled, 80% of them at least. Check the links in the description and in the comments below. We have Black Friday discount on all plans and a special program, one-on-one mentorship, lifetime access. So check the links below, and until the next video, do good things.